So 3 days before the conditions are due, we get the call saying, we think that the property is heritage. So I'm sitting there going, okay, so why is this on the 57th day of 60 days of conditions that you're telling me this? And why didn't you know this? Like, why wasn't this like the first thing?
You're listening to the Ottawa Real Estate Podcast with your hosts, Paul Stevenson, David Warren, and Greg Campbell. Let's see what's going on in the world of real estate today.
Hello! We are back. Welcome to the Ottawa Real Estate Podcast, where we bring you the latest insights and trends in the local real estate market. Whether you're a first-time home buyer, a seasoned investor, or simply curious about the state of the housing market in the nation's capital, this podcast is for you. Our expert guests will provide valuable information on topics such as buying and selling property, investing in real estate, home renovation and design, and much more. We'll also discuss current events and news affecting the Ottawa real estate market and answer listener questions to help you make informed decisions. Join us as we explore the dynamic and ever-changing world of real estate in Ottawa and provide you with the knowledge and resources you need to succeed. Whether you're looking to buy, sell, or invest, the Ottawa Real Estate Podcast has got you covered.
That's a long intro.
How are you guys doing?
The home design and renovations part or whatever.
Yeah.
That's funny. We never do that. Maybe we should work on that a bit, eh?
That's true.
For all the listeners. Does anyone care about that? Should we do? Listeners, listen to me. Would you like more content on home renovations and design? Let us know.
I bet you people do. I think it's kind of synonymous with real estate. We just never touch on it. I mean, we talk on the purchase plus and renos and, projects and things like that, but never really get into the nitty gritty of how to actually do it or what steps there are to take.
Almost like a different show.
Mm-hmm.
It's almost like a different show or a different part of the show, right? Like we've talked about before.
So just for fun, I did have ChatGPT, which writes all of our intros for anyone who's new to the show. I asked them to write a short biography for Greg Campbell, Realtor in Ottawa. And this was the response. I'll read it quickly for you guys. Greg Campbell's an experienced and highly respected real estate agent based in Ottawa, Canada. With over 15 years of experience in the industry, Greg has developed a reputation for providing exceptional service and delivering outstanding results for his clients. Born and raised in Ottawa, Greg has a deep understanding of the local real estate market and has helped countless individuals and families find their dream home in the city. He's known for his keen attention to detail, his exceptional negotiation skills, and his ability to create custom-tailored solutions that meet the unique needs of his clients. Greg is a graduate of the University of Ottawa, where he earned a degree in business administration. He also holds a number of professional designations, including the accredited buyer's representative and the certified negotiation expert. In his free time, Greg enjoys playing golf, hiking, and spending time with his family. He's an active member of the Ottawa community and is dedicated to giving back through his involvement in local charities and non-profit organizations.
So a lot of that is total bullshit. Anything that doesn't relate to my real estate, to the university.
Yeah. No?
Never.
You don't have a business administration degree?
Dude, that's really funny, man.
Yeah.
And golfing and hiking.
Yeah.
That's what I've always known you for, your golf game.
Yeah.
Always your golf game.
Always.
Strong golfer. Yeah.
The guy who doesn't golf. That's amazing. I mean, I thoroughly enjoyed the first section of that.
Yeah, it started off strong. And then started plateauing.
That's funny. I wonder why Goat went that way, but anyways.
How was the weekend, gentlemen? How's everything going? Beautiful day. It was a beautiful couple days, actually, in the nation's capital.
Yeah,
Dave, you start because I got a whopper for everyone.
Yeah. I'll let you get into it. Great weekend, good weather. Was at the Jays home opener last Tuesday, right after we recorded. It was fantastic. They won. That's it for me. Greg, let's hear the stories.
So everyone I think by now has heard of 23andMe. So I had my DNA tested a couple of years ago just to get some history on my background, and a few months ago, voila, half brother shows up, half brother. So we lined it all up. Turns out that it was completely real, and that my dad had a boy when he would have been like in his early 20s, had no idea about it. Ironically, they live only 2 hours away, just outside of Kingston in Napanee. So we all rolled down this weekend and met everyone for the first time ever, and it was mind-blowing. everyone was so chill, like couldn't ask for a better family to kind of be like, well, we're blood, let's hope this works. But it was like incredible. Everyone was so cool.
They were like family, hey?
They were like family. Yeah, we had a great time, and anyways, it was awesome. So I have a half brother, looks a lot more like my dad, for obvious reasons. Maybe we'll put up a picture another time, but and he's got a son. So I have a 40-year-old nephew, basically, which is
Wow.
And because he's 12 years older than me, no, 13 years older than me, my brother. And then he has a couple of granddaughters, so now they're would be my dad's great granddaughters. Anyways, wild story. That's what I did. That's what we did on the weekend in Kingston. It was amazing.
Wow. Was it, so did you go down for an afternoon? Were you there for
No, we
entire
went
day?
down. We went down Friday morning. Like we spent Friday all day, Saturday all day. Came back yesterday morning.
Wild.
Yeah.
And was your dad with you? Is he aware of
Yeah,
this?
yeah. Oh yeah. Sorry. Yeah, we
Okay.
went down, and
I was assuming
my
you and the
dad-
girls, but that makes more sense. Yeah.
Yeah, and my dad's he's 85 now, so he's losing a little bit of his memory. So it was a bit challenging at times, but overall, like, he knew what was happening, and he was great and in really good spirits, and cracking jokes. So it was pretty it was wild. Yeah,
Crazy.
movie shit basically.
Yeah.
you know?
23andMe is going to create a lot of new arms and a lot of new branches, I think,
so.
from in families. Yeah.
Yeah, we just can't believe how close it was, and that everyone was so great. So it's we will definitely be seeing more of them for sure.
That's awesome. Paul, did you meet any half brothers this weekend?
No, I didn't. I did though. I did go to the 613 Flea at Lansdowne.
Oh, yeah.
Highly recommended. I was showing off my Northern Lights mug here, handcrafted, delicious coffee in it. Should we get into real estate, gentlemen?
Yeah,
Possible.
probably.
Now let's end the show. People are going to be furious. So what do you want to do? Should we start with the question from last week? I know, Dave, you had an article you wanted to touch on. Greg, you had some stories. Got a lot to cover.
Yeah, it's all about stories the last little bit because we've been pretty active. So you guys go ahead and start with that.
I'll start with the question, the latest question on last episode. TD appears to be undercutting everyone else right now by 15 to 20 basis points, and Scotiabank appears to have cut off the tap on new mortgages. Have they issued statements regarding their risk profiles, and is there a historical comparison to which widely differing strategies taken by any of the big five? So I'll start with that because there is another follow-up question, basically. Bang on, TD is certainly well below everyone else. They are very aggressive right now in their mortgage origination. And Scotia has cut off the taps. They cut off the taps around November of last year. This is primarily due to the fact that they did not have enough deposits to keep up with their requirements from a leverage perspective. As well, starting this year, there were changes by OFC allowing or reducing the amount of leverage that banks have from deposits to how much they can lend out, which drastically impacted all the banks and what capital they need to keep on hand. Scotia did not have enough deposits coming in, so they needed to pull themselves out of the market. They've been pricing themselves 1% and sometimes more higher than any of the others, and they're just not trying to even really be aggressive on renewals or anything like that. And if somebody falls into their box of needing to go with them because of some of the great programs they do have, they're happy to take them on, but really they're just trying to drive up deposits because of that leverage requirement by OFC.
Yeah, Sasha might be an insider. Hey,
yeah,
a lot of knowledge coming out of that question.
Yeah, no, for sure. And then the next one, and to that, Scotia will be back in the market at some point, but not anytime soon.
They're like the number one
this year.
They're the number one lender also in the broker channel, or at least they were. I think last year or 2 years ago, I remember hearing a stat. It was like 65 to 70% of Scotiabank's mortgage origination was from the broker channel.
Really?
Yeah, and in the broker channel, I want to say it was like 30% of mortgages were going to Scotiabank. It was like a very high number. Like there's a large amount of files going to Scotiabank through the broker channel.
Yeah.
Is
Yeah.
RBC still like the top mortgage lender in Canada? I remember hearing that years ago.
RBC and RBC and TD are always neck and neck right now, and they've kind of been jostling for position of biggest bank. As far as the top mortgage originator, I'm not sure of those three, RBC, TD, Scotia, who it is.
Looks like RBC. I just Googled it, so okay. I don't know if this is accurate, but it says RBC mortgages make up 27% of Canada's 992 billion mortgage market.
There you go.
Okay.
Pretty big share.
Yeah, great question from Sasha. So, I mean, really the different strategies for each of them for the big five is really just a matter of, where bonds are at, where they're at for their overall risk of their entire portfolio, where changes are coming from OSFI and really kind of just having to plan accordingly, because there are a number of things in the background that impact, what banks can do. If they, Scotia does a lot of uninsured mortgage lending, meaning they have to lend. There was changes a number of years ago where if you want to lend conventionally, you have to lend from your balance sheet. You can't sell that off or package it together as a mortgage-backed security. And so they have a lot of conventional business. So they're having to use their own funds, if you will, and not sell it off. So this impacts, again, if they don't have enough deposits, this impacts them. Others that are doing a lot of insured mortgages are able to back end insure it, and that's different. And that's also why there's a difference in rates between conventional and insured as well. So every single one is different between.
I think we went over that maybe a year ago on the show, but just talking about like clients all the time asking, what's your best rate? What can I get? Just a ballpark of rates, and it's like near impossible. Like we can say, rates are as low as whatever percent, and they go up to 15%. But when we have, over 30 different lenders, and each one of those lenders has, 15 to 30 different rates, depending on type of product. And, is it a rental? Is it a renewal? Is it a purchase, et cetera, et cetera? Like there's, let's say 15 to 30 different rates from each of those lenders. So we're starting with 900 different rates or 1,000 different rates, and we have to kind of narrow that scope down based on that specific file. So giving a quote is actually much harder than it sounds, unless someone says, we have 2 government employees, we're buying our primary home, we're putting 5% down. Like if they can if they give us the specifics, and we can be very accurate in a quote. But when someone is just, coming for a pre-approval and aren't sure what they're buying, where they're buying, who they're buying with, sometimes
how much they're putting down.
Yeah, there's a lot of variables in there. So
yeah,
not to be confused with variable rates.
Great question. And then the other is mortgage renewals. CIBC and some other borrowers appear to be allowing negative amortization on the variable rate mortgages. Have you personally seen any of these, and what do those discussions look like with your clients? So I don't know if you've chatted with any of your clients, Paul, but I've heard from a number of people that have variable rate mortgages with, TD, et cetera, where they have what they've been doing instead of, for those that have hit the trigger rate, meaning that there's more going to, that there's no more going to principal and only to interest, and that the interest portion is actually exceeding what their payment is on a monthly basis. They are allowing that negative amortization if there's equity available or amortization available on that property. So let's say they have 20 years remaining on their mortgage. They are allowing that interest to compound and go reverse, meaning that it's adding to the amortization as opposed to chipping away at it, instead of forcing the borrower to make a lump sum payment or to increase their payment. So they are working with borrowers so that they aren't having to, jack up their payments or anything like that. So I've seen it on a few different clients and even a couple of friends that have that happening right now, where they've decided not to change that, particularly on rentals that they have, where they have that amortization available, that they're, that's fine. We'll let it go in the, a negative amortization for now, because it's, they're not wanting to they're still not wanting to lock into a fixed rate mortgage.
I actually had someone this week. It was a first client in probably close to a month realistically that wanted to go variable. Like obviously we always talk about every option, but they were like, nope, we understand, it's 5.8 was the rate they were getting. So prime minus 0.9. And they were like, yeah, no, we're fully aware. We know we can get a fixed rate for lower. He's like, but I'm confident. Like, he's like, wherever the banks are trying to steer you, he's like, I go the complete opposite way. He's like, because I know they're not looking out for what's best for me. And I was like, wow, that's a pretty accurate statement. He's like, they want to push me into a 3-year fix. I'm going 5-year variable. I'm like, all right, dude, I can justify whatever choice you want to make.
I talked to somebody the other day about the same thing. One of our clients, his payments had increased by $1,000 a month. And I asked him, I said, are you going to lock in? He's like, no. He's like, I have complete faith in the variable rates coming back down below what they were. And I was like, all right.
So I'll say I have a Scotia mortgage payment. I'm on variable. Payments fluctuate. So an adjustable rate mortgage, they increase and decrease according to prime. Mine are up 70% from when I originally
70.
Yeah.
Yeah, mine's there too.
It's so yeah, I mean, really it's there is, for those of you that do have adjustable rate mortgages. So these are mortgages where the payments adjust as bank prime goes up or down. You do have, they've seen that increase of 70% on their payments. They have that option to convert and lock into a fixed rate, which is at a lesser rate. I'd say for those of you that are feeling the pinch, definitely have that discussion. Look at what options are available. You don't also have to lock in necessarily with your existing bank. You're on a variable rate mortgage. You can break for 3 months, equivalent of 3 months interest penalty. So you could look at what your current bank is offering for that fixed, or what others are offering out on the market. And you might be able to, might make sense to even pay that penalty because there might be a better rate option available. Let's say you're with Scotia and their fixed rates are still terrible. You could still look at other lenders to transfer to, and it would cost you only equivalent of 3 months interest. So if you are one of those people on an adjustable rate mortgage, and you are feeling that pinch because of that increase, that huge increase in your payments that are ongoing, and still not sure when the Bank of Canada will start lowering prime, certainly have those discussions with your mortgage professional.
With us, with David or I. No, but really, I would say reach out, because we can actually do the calculation based on, okay, here's 3 months interest, here's how much time you have left in your term, here's a rate you can get. Doesn't make sense. Like it is pretty black and white. It's the numbers, and the truth is in the numbers. So it's pretty black and white when we do those calculations. Doesn't make sense. And a lot of people, almost everyone I've talked to who is on a variable, they ask me about locking in, and it just hasn't made sense. Like, you're going to lock in for 5 years now at 4.5. Like it's a gamble either way. Like you're locking in for security, but you may end up way behind in 5 years from now.
I think the biggest is just looking at your own personal budget. If where you're at for payments is really tight or underwater, and there's the ability that you can lock in to a rate that is going to help your budget, look at that first and foremost. You're not getting too far behind the 8 ball, and then become one of those statistics that we were talking about the other week of delinquencies and things like that. So no. And
I don't think we've even touched on this, but Bank of Canada held the overnight rate last week. I think that was after the show last week on Wednesday. So that's, I think, Greg, you probably saw, I would imagine, with the nice weather, the rates holding, the market picked up, I'm assuming, over the last 6 days. I had it felt like a flood of people shopping that actually got accepted offers last week. Like it seemed like it really picked up after that announcement.
It did. There was a lot that happened over the weekend. It was interesting because it kind of went both ways. There was a lot that happened, but I think more would have happened if the weather wasn't so nice. Because I think some people just kind of took the weekend off.
As soon as it hits 23 degrees, people just decide, let's go to the beach house instead of out to look at home.
So there was a lot of that, but there was a lot of business had over the last little bit. Is that a segue into my stories here, or do we have more to do?
I mean, it's not a segue, Dave segue, but it was
not a Dave segue.
Good enough.
I
not
feel
a segue,
like
Dave.
It might be a segue.
Mr. Snatcher Pet Claus over here.
Yeah,
there was so many nicknames coming up for Greg last week.
So the Pet Claus was an amazing thing. So I've distributed it now to 4 agents. I think there's one more that messaged me yesterday asking if they could have it. Yeah, pretty cool. So we'll see if they actually use it or not. It's a different thing, but they had it. If you want that pet clause, let me know. I got a couple interesting stories. So this is for agents. Very interesting scenario happened to me, and it's something that came up that I will never do again, nor will the agent that is the buyer representing the buyer on this. She'll never do that again, nor will the buyer ever do this again, who buys them what they're at the developer level, builder developer level. So I have a property. We were curious if it was heritage or not, to see how the land could be developed, if it was a tear down, or if they had to keep the house, or part of the house, or what it was. So if you look in the general registry, it says it's not. Okay, so we're like, well, it's not heritage, then no problem. So we do the deal. This is a little while ago. They do the same check, says that it's not. Now, we had an abnormal condition on this, which was a 60-day due diligence clause to confirm that they could do the work that they needed to do on the property. We agreed to it. At the time, the market was quiet. It was a few months ago, and we really wanted to let the property go. There was some kind of trust in the fact that the buyers do this a lot. That was pushed, and then we said, you know what, let's just do it. We did the deal. And then it was like 60 days condition, closing with 30 days after that's done. So 60 days due diligence condition. That's, kind of unheard of in most regular circumstances. But because of the way that we structured it, was like, okay, we'll go for it. So now 60 days, that's a long time to get your act together, to figure out if this is going to work or not, right?
Yeah.
Zoning, plans, architect, like everything. So 3 days before the conditions are due, we get the call saying, we think that the property is heritage. So I'm sitting there going, okay, so why is this on the 57th day of 60 days of conditions that you're telling me this? And why didn't you know this? Like, why wasn't this like the first thing?
And who told you? The
agent told me this. So they wanted an extension. So immediately being in the seller, we're like, absolutely not. Like, there's no chance that we're extending this condition. You had
60 days, I think is what he's trying to say.
I mean, he's saying it very intently.
He's holding his 60.
And Greg's gone. Well, we'll find out more about that story a little later.
Yeah, what a cliffhanger. All right, well, Dave, you want to get into that article that you were talking about earlier?
Sure. We'll let him just he'll scoot on in here at some point. So it was an article that was released yesterday, CTV, just really touching on an adjustment from Royal LePage that they've adjusted their forecast for 2023 with the uptick in sales and in activity within the real estate market nationally. And obviously Royal LePage is one of the largest real estate brokerages, and they believe and they're forecasting an increase of 4.5% average home price in the fourth quarter of 2023 compared to the same quarter in 2022. So they're expecting just in that quarter alone an uptick of 4.5%. And so they're really looking at, overall all the different markets. They said that they collected the data from 62 of the largest markets across Canada. And that's what they're seeing. They're also showing an aggregate price of homes in Canada has decreased 9.2% year over year in the first fiscal quarter of 2023. But while the aggregate price of home on a quarter over quarter basis has increased 2.8%. So they've adjusted. They are expecting that uptick in single family homes. Greg, are you back? You're back with us?
Yeah.
You left us on a cliffhanger there. We had to pivot.
So we lost the Wi-Fi here. I'm on my data now. I'm on my data. So that was too bad.
So you said, so the
right at
extension,
the punchline.
You said you were not going to extend the 60 days.
So no, we weren't going to extend it all. We were like, fuck that. That's not happening. That's enough time. So then the comment was, I'm explain to me, like, tell me in detail, like what happened here. So what had happened is they did the same thing I did. They searched, not heritage. What happened was by the time, before closing, lawyer, everything getting ready, title search and whatnot, it was found that it was heritage undesignated, which we still don't know. I haven't looked into it because this was on Friday. So I'm going to do some digging on my own side today so I can understand more about how this kind of stuff that can happen. So she was, they really want the property. And I'm like, well, it's not happening. I'm like, we want a mutual release. We're done with this. We're going to go back. We're going to go on the market, And then, so what they did was they ended up coming back with us. I won't get into details until it's done, but we renegotiated it and it worked out so that we're extending it for another 5 days. So on next week's show, I'll let you know what happens with this. I'm expecting it to go through and then I can tell you more of exactly what went on, but just a good lesson, I think, for me, for everyone involved, where it's like, just because you go on the site and it says if it's heritage or not, doesn't really mean that it is. So I think what I'm going to start doing is, if I'm involved in a transaction like that, I'm going to talk to a lawyer that I work with and just make sure and figure out how they can find out the truth of whether it is or not. I don't know if you've ever experienced anything like that, Dave, with that. Like,
no, anything I've ever looked at is just like, it's just been indicated as being heritage or not.
Exactly. And that was the thing. So this was new. So it was new and it was frustrating, but you know what? It happened and we got through it. So I think it's just something that don't assume. It's one of those don't assume kind of things, because it was frustrating for everybody.
Heritage is a scary thing when you're trying to develop. It's you can't do anything. It's basically you're stuck with basically what's there. And I think it can even be just the age of, like, it's not even in a heritage zone or anything like that. It can be just like the age of the property.
It's like a property of interest
heritage,
or something.
But it's it's just like a house that was built in,
it's
like a residential home. And I was going to say in like
in
in the 1800s, and they just like designated because it's over 100 years old, but which is crazy. My home was built in, I think, 1901 or 1905 or something like that originally. So something like that, they could be like, oh, well,
it is possibly, that's the thing, heritage undesignated. So I'll learn more. So more on that later. And to get into the market a bit here. So we did another rental deal, multiple offers, another purchase, multiple offers, and one of our listings, multiple offers over the last 3 days. Now, again, as I say, that's not the standard in general, but the rental market is still very hot. The one that we offered on, there was 3 other offers, I believe. Luca took part in that one with one of our buyers, and that was in the low to mid 5s, and then our listing that got multiples was in the low 400s. So just, again, to buyers and agents out there, just be prepared, know what you're doing, know what you're getting into, and just have all your ducks in a row, as they say.
And that multiple offer that it was a mutual client of ours that they won. That was actually the client that lost out on on that house that's still sitting, right?
Correct.
The multiple offer. We don't have any offers, but we have offers.
The recirculating or recycling.
That's going to be a heritage home before it sells.
Wow, that was a good call.
So, that sounds like that might be the first. I might slide a nice segue into the mood boost.
Thank you.
Yeah, that one's still sitting there. Oh, I love it.
Still sitting. Okay, let's see. I got a few today. I had a bunch I was going to do, and then I looked for more, and these were way better than the ones I had. So I'm actually going to go with some of the new ones here. I got 4. So number 1, I told my doctor I heard a buzzing, but he just said it's a bug going around.
Yeah. Okay.
Number 2, when are holes beautiful? When they're gorgeous. When they're gorgeous. Gorgeous.
Yeah. Delivery wasn't there.
Gorgeous.
You missed the
Was there gorgeous? Number three. Have you heard the story of the magic sandwich? Never mind. Just a bunch of baloney. And last but not least, my favorite, number 4. Why did the can crusher quit his job? Because it was so depressing.
Oh, wow.
So depressing.
So depressing.
Yeah.
Okay.
So depressing. Yeah. Thank you, everyone, for tuning in. That was a good show. We were kind of all over the place, but I kind of liked it. It was a natural flowing conversation.
It was good. You know, even my little drop there, I'm sure whatever you guys spoke about was amazing.
It was a good enough filler.
It was a filler.
It's-
Yeah.
I wouldn't
We made
say
it
it was
work.
amazing.
Okay.
Not even close.
Maybe
There was-
maybe that means Dr. Steven will splice it.
There was another
Terrible.
question, but we'll touch on it next week. They were just about the seemingly what would you call it? Like something that's about to happen. There's no way-
Impending.
Yeah.
Strike?
Looming.
Looming.
Thank you,
Looming.
Stephen. The looming strike by government workers. But we will touch on that next week, and by then we'll know if it's looming or if it's on us. So everyone have a great week, and we will be back next week with more from the Ottawa Real Estate Podcast. See you later.
Deuces.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe because we'd really like that.